Heyo value investors, how are you doing? My name is Stijn, welcome to my YouTube channel. As you've probably guessed from the video title, today we're analyzing one of your stock picks. A longtime viewer of this channel, Marco Vitti, asked me to take a look at this company, H2O Innovations, or these ticker symbols. If this video is well enough, I might turn this into a series and do these analysis on your stock picks more often. So do make sure to let me know down below any company or stock you would find interesting and why they interest you. Also, let me know your thoughts about the format of this series so far. With that said, the first thing we'll look into is what does the company actually do. Second, a deep dive into their financials. Third, some rough price predictions and buy targets. And lastly, my opinions and thoughts on this company. Now, let's go. So what does H2O Innovations actually do? Well, it's partly in the name already. They deal with water. And the following is from their latest financial report. And from their financial report, we can see that there are three main parts to their business. First, WTS, or Water Technologies and Services. So the first part of their business designs and provides custom built and integrated water treatment solutions based on membrane filtration technology. And from this text, I gather that WTS has three main revenue streams baked into their business model. And the first is an original sale to the end user, so this is a one-time purchase. The second is their after-sales service, which could be a one-time thing as well, but it could also be a recurring revenue stream. And the third is their smart digital solutions, which seem to be a recurring revenue stream. Also, so far WTS has mainly sold their system to North America, but they seem to be expanding to the other parts of the world as well. So the second part of the business, specialty products. H2O Innovation offers a complete line of specialty chemicals, consumables, specialized products for the water industry and maple equipment. So the corporation is now exporting these products to 75 different countries. So they sell these specialty products to their 4 subsidiaries. And the first is PWT, which focuses on chemical manufacturing and supply of the membrane industry. And the second is Genesis, which manufactures specialty reverse osmosis membrane chemicals. The third is Piedmont, which is a global leader in corrosion-resistant equipment for desalination plants. Desalination is turning salt water into drinkable water. And the last is H2O Innovation Maple, which focuses on equipment dedicated to maple syrup production. And their third part of the business is operation and maintenance. H2O Innovation operates, maintains and repairs water and wastewater treatment systems, distribution equipment and associated assets. So they are operating 275 different facilities in 2 Canadian provinces and 12 US states. And we'll go deeper into their financials in just a bit, but I want to focus on this part now. See their revenues for this quarter in 2021, they did $40 million. And of that, 82% came from recurring revenue streams. To me, it seems that this company is able to sell a product and they get revenue from that, but also get revenue streams years and years into the future, and that is because of maintenance, upgrades, or even running the facility. And this is obviously a huge advantage compared to traditional companies which do not have a recurring revenue model attached to it. So as an investor, their high recurring revenue is of course very attractive. So remember the three main parts we just talked about? Well, these are the percentages of revenue they generate each. So 26% for WTS, 30% for specialty products, and 44% for operation and maintenance. Cool, so now to have a clear picture of what the company actually does, let's focus on their financials now. At this point in time, the company is trading at $1.83 per share. And during the last quarter, there were 81 million shares outstanding and there shouldn't have been much dilution since then. So 81 million shares times $1.83 per share results in a market cap of around $150 million. And during the last quarter, they did roughly $40 million in revenue. So annualized, that would be around $120 million in revenue. So from those numbers, it seems that the company is trading at roughly a price to sales ratio of 1.25. And this seems to be quite low actually. There are companies that are trading at way higher price to sales multiples, even in the utilities sector. And the company is actually profitable with net earnings of about $2 million for the last quarter, so that would be about $8 million annualized. And this is especially great to see if we compare it to the same quarter just last year, where it did about $3 million in loss instead. And their net debt is extremely low at just $3.3 million. They could pay off all their debt in just 1.5 quarters of profits. This is extremely solid. As a reference, when investing, Warren Buffett himself is fine with debt levels slightly below 4 years of net income. So therefore 1.5 quarters of net earnings is extremely solid. However, if we were to divide their market cap of $150 million divided by their net earnings annualized, that would result in a PE ratio of roughly 19, which still seems to be quite reasonable at the current environment where water supply stocks are trading at an average PE of 23. So from a first glance, their financials seem really solid. They are just now turning a profit, and a healthy one at that. They are trading at conservative price to sales and price to earning ratios, which is great to see, and I just love the fact that they are so low on debt. Also, their revenue streams are quite diversified between the different parts of their business. So all in all, they get a pass from me for the financials. Now onto the rough price calculations and buy targets. So of course I have prepared my buy target spreadsheet for you guys. So annualized are doing about 10 cents in EPS or earnings per share. And we'll play with these growth numbers in a bit, but I'm also penciling out a future PE ratio of 20, which seems to be conservative in the utilities sector. We're also penciling in a discount rate of 15%, which is extremely conservative. So let's say that this company will continue to grow their EPS by 10% for the next 5 years and then 5% for the 5 years after that. So these numbers lead to a future stock price of $4 in the year 2031, which is just a 2x return. And these prices give us a buy target of about 50 cents per share, which is nowhere close to the current $1.83. So let's increase these numbers just a bit. Let's pencil out 15% growth in EPS for the next 5 years and 30% after that. So those numbers gets us to a future stock price of about $7.50 in 2031, which is more reasonable, and a sticker price or intrinsic value of $1.83 today. So to get to the current share price, they need to grow their EPS at 15% at least for the next 5 years, and then 13% after that. And remember, at these growth rates, we do not even have a margin of safety yet. This is just intrinsic value, and we value investors never pay intrinsic value. So let's increase these numbers just a bit more. Let's pencil out 25% growth in EPS for the next 5 years and then 20% after that. And these numbers result in a future stock price of about $15 per share and a sticker price today of about $3.75. So that with a healthy margin of safety of 50% results in a buy target of about $1.90. So for this stock to make any sense at all, they need to be able to grow at 25% in EPS for the next 5 years and 20% after that. And to be honest, I have no idea whether that's possible or not. I am extrapolating numbers from their first quarter of actual profits. So potentially their EPS for 2021 will come in a little bit higher than I predicted. Also, since they have just recently started turning a profit, they could probably way improve their margins for years to come, which in turn should make these growth numbers more attainable. So just keep in mind, I'm just showing that at the current share price, they need to grow their EPS at 25% for the next 5 years and 20% after that. And of course, that might still be an okay investment even if they aren't able to grow the EPS at those high growth rates. So now that we know what growth numbers are roughly baked into the price of this stock, let's talk about my opinions and thoughts on this company. So I'm personally not investing in this company. I do not really find water treatment facilities that interesting, to be honest. So in turn, I'm not really that inclined to go deeper into my research into this company or their technology. But that of course doesn't mean that you shouldn't research or invest in this company. If you find the business interesting, well, it seems solid enough to at least start looking. And now I'll provide you guys a list of the concerns I would need to answer before I would ever think of investing in this company. So the first concern is this. A large potential risk I see for this company are graphene-based water filtration systems. If I were to invest in this company, I would for sure want to know whether their technology would be outdated anytime soon. And graphene-based water filtration systems might be the technology to watch. Also, we haven't really looked at the management team at all in this video. Are they any good? Are they honest? Etc. And the third concern is obviously growth. Are they able to grow their EPS at 25% for the next 5 years and then 20% for the next 5 years after that? And I understand that's a question that's extremely hard to answer. So some things to look for in that respect. Do margins seem to improve? Or is there any reason to believe that in the future margins should increase? Are there any large deals on the horizon? Are they working on new promising technologies? Or are they expanding aggressively outside of North America or even inside of North America? And aside from those concerns, there are of course plenty of other things to research. But this should be a good enough starting point. I wish you happy researching in this company and plenty of fun in general when investing. And I think that's it. I really hope you guys enjoyed this video, and if you did, please give it a like and maybe even subscribe. Comment down below what you want me to talk about next, and I'll see you guys in the next one. Peace.